Hi, Assalamualaikum. My name is Afi, and today I would like to talk about central bank. Central bank is a financial institution responsible for managing a country's monetary policy and regulating its banking system. It has exclusive authority to issue currency and control credit in the economy. Next, central banks are often considered politically independent, allowing them to make decisions that support long-term economic stability. However, they still operate under legal frameworks that grant them special powers, even if they are not directly owned by the government. Overall, the central bank plays an important role in maintaining financial stability and supporting economic growth.
Assalamualaikum warahmatullahi wabarakatuh. My name is Sharil Izani bin Hizam. My metric number is 313205, and today I will present about the Central Bank of Malaysia. To be more specific about this topic, I'll talk about the system in Central Bank of Malaysia. We know that the system in Central Bank of Malaysia play an important role to maintaining economic stability and economic growth. So, what is their system? In Central Bank of Malaysia's system, we got 5 main components. First, we got monetary policy. Second, we got currency issuance. Third, we got banker to government. Fourth, we got financial system regulation. And the last one, we got foreign exchange management. I will explain to you each one of these main components. About monetary policy. The Bank Negara Malaysia implement monetary policy through overnight policy rate. Secondly, we got currency issuance. We know that the Bank Negara Malaysia issued MYR, also known as Ringgit Malaysia. Only Bank Negara Malaysia can issue these notes or coins. There's no other bank in Malaysia that can do that. We got bank to government. So what does the Bank Negara Malaysia do to the government? We know that the Bank Negara Malaysia manage their government account or their public debt and also give advice to the government. Fourth, we got financial system regulation. So Bank Negara Malaysia will supervise this bank. Why? Because the Bank Negara Malaysia will ensure the financial stability and prevent this bank from bankruptcy. The fifth one, we got foreign exchange management. Bank Negara Malaysia will keep some of the foreign exchange such as United States dollar in the Bank Negara Malaysia. And the Bank Negara Malaysia also will stabilize the exchange rate. And this will protect the country from the external shock. So I think that's all from me. Thank you.
Assalamualaikum and hello everyone. My name is Muhammad Deryasha bin Ramli and my matrix number is 3132X6. Now let's move on to the next chapter, which is chapter 3, Central Bank System in Indonesia. Bank Indonesia is the central bank of the Republic of Indonesia. It plays a very important role in maintaining the country economic stability. Its position became stronger after the implementation of Bank Indonesia Act number 23 of 1999, which was later amended by Act number 6 of 2009. These laws officially established Bank Indonesia as an independent state institution. As a legal entity, Bank Indonesia has the authority to issue binding regulation and represent itself in legal matters. This means Bank Indonesia can create policies and take action that are legally enforceable in Indonesia. Bank Indonesia has a clear vision to become a leading digital central bank. Its main objective is to maintaining the stability of the rupiah, which is Indonesia's national currency. To achieve this, Bank Indonesia applies integrated policies in monetary management, financial system stability, and payment system. Because Bank Indonesia is independent, it can perform its duties without interference from the government or other parties. This independence allows Bank Indonesia to make decisions based on economic condition, not political pressure. As a result, Bank Indonesia can focus fully on protecting Indonesia's economic stability. So in conclusion, Bank Indonesia is a strong and independent central bank that works to ensure a stable currency, a secure financial system, and an efficient payment system for Indonesia. That's all from me. Thank you.
Hi, Assalamualaikum. I'm Muhammad Haddad. In this part, I will explain to you about what monetary policy tools that used by central banks. But we focus on Bank Negara Malaysia and Bank Indonesia. First of all, in common knowledge of banking, every bank have their own method or monetary policy tools to use for managing their policy systems. In this study, there is similarity and differences of monetary policy tools for each Bank Negara Malaysia and Indonesia. As we all know, central banks are targeting in big issue, in other words, macroeconomics. Central bank will keep country's inflation in safe level. Employment aspects are one of central bank's goal to maintain the employment level, which is to moderate business cycle and cost of contribute in long-term growth. Alright, this is the difference of monetary policy use, which is Bank Negara Malaysia, they use overnight policy rate, OPR, and statutory reserve requirement, SRR, for last moral suasion and macroprudential measures. For Bank Indonesia, they use Bank Indonesia 7 days reverse repo rate and reserve requirement GWM, which is Gyro Wajib Minimum, and Forex intervention.
As I mentioned earlier, for the Bank Negara Malaysia, first, overnight policy rate, OPR. The OPR is the main policy interest rate. When Bank Negara changes the OPR, it affects lending rates and savings rates in the economy. Second, the statutory reserve requirement, SRR. SRR controls the amount of money that banks must keep as reserves. By changing the SRR, Bank Negara can control bank deposits and liquidity in the banking system. Third, moral suasion and macroprudential measures. These include policy guidance, lending rules, and loan-to-value limits. They are used to manage financial stability and control credit growth. In conclusion, these tools help Bank Negara Malaysia maintain price stability and ensure a stable financial system. After that, Bank Indonesia. For the first, we have Bank Indonesia 7-day reverse repo rate. This is the main policy interest rate in Indonesia. It signals Bank Indonesia's monetary stance and it's used to control inflation. Second, the reserve requirement, also known as Gyro Wajib Minimum. Banks are required to hold mandatory reserves. This tool is used to regulate liquidity and control credit expansion in the economy. Third, foreign exchange intervention. Bank Indonesia buys or sells foreign currencies in the market. This helps stabilize the rupiah and maintain a stable exchange rate. To sum up, these tools help Bank Indonesia maintain their price stability and support their economic stability.
However, monetary policy tools are not the same as instruments. They are quite too similar but not the same. There are two instruments used by these central banks, which is quantitative and qualitative. We start with quantitative. For first, open market operation, where both central banks sell buy the government securities. For reserve ratios, which is Bank Indonesia Gyro Wajib Minimum, while Bank Negara Malaysia use statutory reserve requirement. For the third last of quantitative, which is discount rate, where both central banks use this to lend other banks, like Bank Indonesia use 7 days repo rate, and for Bank Negara Malaysia use overnight policy rate. So this is the difference of monetary policy tools that both banks use. Okay. For next or last, qualitative. For first, required margin rate, which is Bank Indonesia often use margin requirements based on their specific credit conditions, while Bank Negara Malaysia on limited use for margin requirements, which is they are based on bank regulations and supervisions. For second, control over mortgage. Bank Indonesia's credit control on MSME, like maybe in agriculture and export sectors. Moreover, BNM controlling credit in loans to focus on reducing residents' debt risk. And lastly, special instructions. Bank Indonesia encourage certain sectors to lend money, while Bank Negara Malaysia ensure prudence for lending by direct meeting discussion.
Okay, now I will move to section 4.2, which is management method in various conflicts. In this section, I will explain how central bank manage different economic problems. I will compare the action taken by Bank Negara Malaysia and Bank Indonesia in three situations. First, unemployment. Second, inflation crisis. And third, the COVID-19 crisis. First, we look at unemployment. High unemployment usually occurs during economic slowdown when business reduce production and stop hiring workers. To solve this problem, both central banks reduce their policy interest rate. Bank Negara Malaysia lower the overnight policy rate, while Bank Indonesia reduce the BI 7-day reverse repo rate. So, lowest interest rate make borrowing cheaper. This encourage business to take loan, invest in their operation, and hire more workers. At the same time, banks have more liquidity, so they can provide more loan to company and consumer, especially small and medium enterprise. As a result, spending and investment increase, business activities expand, and unemployment gradually decrease. This shows that reducing interest rate helps stimulate the economy and create jobs. Second, next we look at the high inflation. High inflation reduces purchasing power, increase the cost of living, and create economic instability. To control inflation, both central banks increase their policy interest rate. Bank Negara Malaysia increased the overnight policy rate, and Bank Indonesia increased the B1 7-day reverse repo rate. They also reduce money supply by selling government securities and increasing reserve requirement. In addition, Bank Indonesia stabilized the exchange rate to control important inflation. When interest rates are higher, borrowing and spending decrease. This reduces demand in the economy and slow down price increase. At the same time, controlling money supply helps prevent excessive inflation. As a result, demand becomes lower, prices are more stable, and inflation is controlled. This helps restore price stability and protect the purchasing power of consumers. Lastly, we look at the COVID-19 crisis. During the pandemic, many businesses were forced to close. Unemployment increased, consumption fell, and financial market become unstable. To manage the crisis, both central banks significantly reduced interest rate. They also injected liquidity into banks through open market operation and reduced reserve requirement. In addition, they provide financial relief such as loan moratorium and repayment flexibility for business and household. Bank Indonesia also intervened in the foreign exchange market to stabilize the rupiah. This action ensured that banks had enough funds to continue lending. Financial relief helped business survive and support households during the crisis, while exchange rate stabilization maintained investor confidence. As a result, the banking system did not collapse, economic activity slowly recovered, and long-term impact of unemployment was reduced. This shows that central banks play a crucial role during major economic crises. In conclusion, central banks use different management methods depending on the type of economic conflict. For unemployment, they lower interest rate to stimulate job creation. For inflation, they raise interest rate to control price. During crises like COVID-19, they combine low interest rate, liquidity support, and financial relief measures. This provides that monetary policy is flexible and essential in maintaining economic stability. Thank you.
In conclusion, central banks plays an important role in maintaining a country's economics and also financial stability. They are responsible for ensuring that the financial system operates smoothly and remain resilient, especially during economic uncertainty. Central banks such as Bank Negara Malaysia and Bank Indonesia use monetary policy tools and various instruments to manage economic challenges. This includes controlling inflation, reducing unemployment, and responding to financial crisis. By managing interest rates and money supply, central bank helps stabilize the economy. In addition, central bank ensure financial system stability through regulation and crisis management. They are also supervise financial institutions, maintain price stability, and protect the value of national currency. By doing so, central bank have preserved the purchasing power of the public and at the same time support long-term economic growth. I think that's all from us. Thank you very much.